Oh, hello, good evening. Not financial advice, just for entertainment. Just giving a, I don't know why I'm doing this, just like a small update. I sold a 40 put on Intel a few days ago on this dip, and it seemed like a pretty smart move. It looked like it was about to break out of a range here, this sort of a sideways thing after the big earnings drop. And the RSI wasn't totally bad, it's sort of in the middle, as you can see here. However, today after hours, there was news that the government was planning on scrapping its Intel grant of a $2.5 billion. It only hit it with like a 1% drop. Kind of thought it'd be more dramatic than this when the news broke, but it wasn't that bad. It's kind of surprising. So I don't know if that implies that there's strength or maybe people didn't think it was that good of a deal. Like, or if it was that likely that it was going to happen, maybe. So I have to figure out what I'm going to do with my Intel put. I got 55 cents for it last Friday when I traded, and it dropped down to like 60 cents. It got worse after I made the trade. Uh, but then now I could have closed around 35, 36 today. So it could have made $20 in like 2 or 3 days, like 40% of the earnings in like 2 or 3 days, which is actually pretty fast return. The cool thing about the trade was it didn't take very much capital to make the trade. So if you would have called it, let's say $500, I only need to put up $500 to earn $55 in premium in about 40 some odd days. So $55 times 9, right, is about 360. What am I doing? 9 times 50, 500. So it's almost like 100% annualized return. So if I earned all the premium on this trade, I would have annualized 100% return or so, even more actually, probably. Math's so bad. Um, and so that I thought was a good trade and a good risk on a big dip. And now I'm just debating, do I just set it in order to close it tomorrow in the morning and just take, $15 of it in 3 or 4 days, which is a pretty good return. Yeah, a lot of time went into this, but I'm still learning how to trade with leverage and to make smart trades because I had done pretty well on this account and then got lit up. So I'm just making sure I'm trying to make smart trades. So I'm probably just going to let it ride because it didn't react. It didn't drop huge after hours. I mean, it dropped like a percent, 48 cents. And so I'm gonna let it ride. Maybe I'll figure it out tomorrow. I just don't want to wake up in the morning to try to trade this for 15 measly dollars. So I'm gonna sleep in. Speaking of sleeping in, I woke up this morning to see what happened with Archer Daniels Midland, but the news was good. I don't know if I mentioned this trade before or not, but I picked up a bunch of, not a bunch, like 25 shares a couple months ago when the news broke about the accounting issue, and just been waiting and waiting to have the earnings come out and so on. And today was pretty decent. Obviously, the market reacted well. My cost basis was an average of 52.49. It got up as high as 57 and change. I sold a few shares at the top today, but I sold some shares last night before the news because overnight it had gone up, and I was like, you know what, I should do risk. But this is part of my free share strategy. So the problem with this trade was that I also did stupid stuff like I bought a put to protect it because I thought at one point earnings was going to be in February, but I kept pushing it back, and so totally lost $25 in a put that expired useless. I bought a call thinking maybe there's a chance it's going to run up. Um, Around the same time, I didn't know that Archer Daniels was going to keep pushing it back. So I blew $45 there buying puts and calls on this piece of crap. Whatever. Um, I did trade a put that made $5. I'm giving you all this detail because it really jacked up my costs to get a free share. Oh, really quick, you can see that I started in January, picked them up. I was kind of more aggressive than I usually am. I usually just buy like 5 shares and 5 shares, but I really thought this thing was going to work out. I mean, I was sure it was going to work out, but still, I was going to risk a lot because I didn't want to lose much. So, anyway, so here's my cost for the 25 shares of Archer Daniels, factored in my cost for the call put and the profit that I made trading it. I don't want to factor in my dividend. Yeah, I shouldn't factor in my dividend that I collected. I collected a dividend, but I don't like factoring in dividends. I want my free share to be earned by the appreciation. So uh, I have 10 shares left. If I wanted to keep a free share, then my exit, this is my current cost, right? All the costs and sales. I need to sell 9 shares at 56.30. Luckily, it's trading at 57 and above, so I can collect my free share. However, I'd like to be able to keep 8, but I don't know if that's going to be possible or not. Um, so right now, so right now it doesn't make any sense because at this point, it's basically, yeah. So maybe tomorrow I'll go ahead and just close it out and just take my free share. But right now, factoring the profits that I've taken so far, my cost basis is much lower than my original purchase price. Um, so if we factor in my 10 shares, my cost basis is like 50. Yeah, it's like $50.65. So I have like 10-12% comfort. Um, I just think it'd be nice to see this gap get filled at some point, or at least push to 60, right? But right now, all the moving averages are, obviously not good right now, but RSI is picking up, and so, if I have some patience, it's only 10 shares. I know it's not a lot of money, but I'm all about like de-risking, especially because the market's so high right now. But if we do get some sort of golden cross in a couple months or something like that, I mean, I could see these 10 shares, getting a bit higher, and maybe I'll get 2 or 3 free shares out of it. So for now, I'm going to sit tight because I've obviously taken some risk off the table, so I'm good with that. And last little update is TSM. TSM actually jumped after hours on the Intel news a little bit. Uh, TSM's been quite popular on Wall Street bets. Um, But TSM is now in basically like all-time highs range right now, a new range. It dropped below the all-time highs, but it could be consolidating. On April 18th, there's going to be earnings, and so I've started taking a small bet on that because I think it's going to run a bit because a lot of people are going to pour into this just because it's like the one of the few earnings plays available until so sometime in May it starts picking up again. So I've just been collecting debit spreads, 195, 200s. I picked up like 3 today. I started with one last week, $22 or so. And today I picked them up like for less. I'm down about 17 bucks right now. I guess I put in about $70. But that's okay. I can't say anything with confidence. I'm not one of those people that's like, oh yeah, it's gonna work out. But I just think that with the momentum behind TSM for how good of a company it is and how it makes, it's the top manufacturer, that um, this thing will run a bit as long as we don't get any sort of major shocks between now and middle of April. And so as it runs up, I hope to take some profits and sell. I don't have any belief that's going to hit 200 or 195. I'm not that silly, but I think that hopefully it'll run up hard enough that um, I can make some money with it. Anyway, that's about it. Uh, just for entertainment, not financial advice. And I'm not waking up tomorrow at 6:30 to watch my stocks tank. It's always fun watching that happen. All right, have a good evening.